Hello, everyone. Welcome to the 14th Learn livestream session. I'm Sabrina, your host for today. As the crypto market shows vibrant signs of a bull run, many investors are looking beyond Bitcoin to altcoins. Today, we'll dissect the performance and strategic insights into Ethereum, Solana, and the emerging contender, SUI, to understand better how they compare to Bitcoin in this exciting market phase. We've got a fantastic lineup of experts who will share their perspectives on these dynamic digital assets. This live stream is available on both the Bybit app and Bybit web, but as usual, for the best interactive experience, do join us on Bybit web where you can ask all of your burning questions. Now, before I introduce our experts, just wanted to announce that we're giving away a total of $500 worth of TON today. So the first $300 of worth of TON will be given away through the pop quiz. Now, this is applicable to both new and existing users. All you have to do is scroll down on this page, answer the 5 simple questions, and be the first 100 to do so, and you will be able to walk away with a share of $300 worth of TON. Now, the second part of the prize pool, which is the $200 worth of TON, will be given away in the form of red packets. Now, this red packet giveaway is exclusively for new users. So if you're new to Bybit, sign up for a Bybit account and click the red packet as soon as it appears, and you will win a share of the reward. Right. Make sure to like this video and share the stream out so that more people can claim their rewards. All right, now let's meet our esteemed panelists. First up, we have Michael, CTO and founder of AutoTrading.vip. Hey, Michael, thank you for being here with us again. Please introduce yourself for those who don't already know you.
Hey Sabrina, thanks for having me again. Love to be back on the live stream. I'm Michael. I'm on a mission to teach the retail investor how to automate their portfolio, because I do the same. It's quite simple. I've a YouTube channel to make it easy for people to do that. You can find it by searching for Michael Automates, right? And then I've also created a couple of tools and education. Basically, my mission is to help as many people as possible to automate their crypto portfolio, because I think, and I can prove it, that this way they can have better results. So I'm coming here with a lot of data, charts, and algorithmic trading knowledge to analyze the market and the altcoins as well. And so, yeah, let's see what alpha I can share with you guys today. I'm happy.
Great. Thank you. All right. And next up, we have David, Chief Strategy Officer and co-founder of Keyrock. Hi, David. How's it going? Tell us a bit about yourself.
Hi, Sabrina. Thank you very much for having me. So I'm Juan David, one of the co-founders of Keyrock. We are building all kind of algorithmic trading systems in digital assets, being a liquidity provider to help the adoption of protocols and systems in this industry for around the past 7 years. We're one of the largest traders in majority of exchanges out there, including Bybit. And I think today what I'm happy to share is our view from our point of view from as a power user. So we're a power user of these technologies, not only of centralized exchanges, but also of all of the smart contract based technologies. We are a power user of move based smart contracts, EVM, and Solana. And as such, I'm happy to see how our expertise in combination with Michael's trading knowledge can help to get a view on this on the evolution of this market.
Thanks. I'm sure everyone here today are excited. They're all excited to hear more about what you guys have to say. So for those of you who are just tuning in, I was sharing that we are giving away a total of $500 worth of TON today. $300 worth of TON will be given away through our pop quiz. All you have to do is be the first 100 to answer the questions, and you will be able to walk away with a share. And the other half, portion of the prize pool, the $200 worth of TON, will be given away through red packets. So all you have to do is sign up for a Bybit account, click on the red packet, and claim your reward. Right. Now, in this first segment, we'll explore how Ethereum, Solana, and SUI have evolved and how they stack up against Bitcoin in this thriving bull market. Let's discuss their market dynamics and why diversifying your portfolio with these altcoins might be a wise decision. So, first off, what specific advancements or projects in the last year have contributed to the popularity of Ethereum, Solana, and SUI? Maybe Michael can share more about Ethereum and Solana, and David shares more on Sui.
Let's do it. Let's do it. Okay, I will also share my screen in this, what I want to say, because actually I want to show the dramatic difference between these three coins that you mentioned. But first I want to say that that obviously, I mean, everyone knows, right, that Ethereum has not been doing well compared to the other coins you mentioned, Solana and Sui. And so the reason is simply that the narrative is driving everything. It's always like this, right? Because the money that comes into anything, right, not only crypto, in general, is decided upon by humans mostly, right? Unless you're a medallion fund who does everything automatic, which most people don't. They decide which coin to allocate or which asset to allocate based on, you know, what is on the roadmap, what is the interesting thing that this technology will bring in the future, right? So Ethereum didn't really come with anything, right? So that's the problem Ethereum has. It's not like it's bad technology or anything like that. It's just that there's no excitement for the future, right? And we want to build a better future, and that is why the money went into Solana, because of meme coins, and because it got basically quite punished, right, after FTX, and there was a lot of fear, right? So that had to be unwound again, right? Because it got punished too much, and so it rebounded quite strongly, right? And Sui is simply a new thing, right? New kid on the block, right? Coming up with new technologies, being a competitor with even better tech and so on, and that's obviously exciting, right? Because it's a startup kind of mentality. But on the I want to show quickly a chart. I mean, just for people who never looked at this stuff, I want to make sure that it's super clear. Let's see, I think it's this one here, where you have Ethereum versus Bitcoin. And let me know if you see the chart, by the way, before I continue talking.
Yep.
Yeah, great. So you see Ethereum versus Bitcoin. The only thing you need to know is going down. Yeah, you see it looks pretty bad. This thick red and green line, this is just so you see the trend easier. So yeah, like if you held Ethereum, that was not great. You should have better held Bitcoin, right? You go to Solana, it looks completely different, right? You see here that it was better to hold Solana, obviously, right? But here you can really see why, because actually against Bitcoin, it performed very well. When you go to Sui, you see pretty similar thing. It's even cleaner, right? It's very clean uptrend. You can see that. So that's the manifestation of it in the chart. And the reason that I mentioned before is simply because of the narrative and the future outlook, right? So that's it for me. One, I guess.
Yeah. What about you, David?
Yeah, thank you for sharing. I mean, I think that when we look at these technologies, I think definitely there is a cycle of opportunity where people are looking for what is the next thing that is going to get adoption. As a matter of fact, like there is a lot more layer ones than these three that we're discussing today, correct? Now, what is interesting about the case and evolution of Solana in particular is that they really had to build an ecosystem from the beginning. While majority of other nascent chains they try to contribute towards the growing ecosystem of Ethereum, which in a way is an easier way to get customer acquisition, but in the same way it's harder to accrue value to your own asset. So it's harder to justify value for your asset, and all the value that you accrue in your asset you're basically in a sense subtracting out of Ethereum. So Ethereum underperformance in a big way when it comes down to narrative is also the fact that a lot of the positive narrative in that ecosystem is accrued in the value of others that are building on top of it, because as Ethereum becomes more of a modular system, but that it only does one piece of the job and other people do the rest of the job, by definition it should also have less value because it's only a portion of the job. Yeah. Then when it comes down to Solana, I mean, like Solana is honestly super interesting. Like it has a community that is like hardcore believers. They have a great narrative, and people that are into the community love the usability of the applications, how smooth they are, and has built a lot of moat because of that. Where even other new chains, call it like the Move ecosystem, correct? In this case, Sui or Aptos or of the likes, they are, instead of trying to target users of EVM and convince them to port into this new technology, they're actually targeting users of Solana, as users that are in Solana are, let's say, considered to be closer to a early adopter, or what sometimes in crypto is called like the degen trader. Yeah. That being said, like the definition of degen trader is something that we try to call them more like DeFi pioneers. if you could look at it that way, And this concept of DeFi pioneers is someone that like it's okay to test new technologies. Majority of the whales that are in Ethereum, they love crypto, but they're actually not looking to test a lot of stuff, correct? They want to keep all their money in ETH mainnet because it's safe. And they, even though maybe early on, 5-7 years ago, 10 years ago, they were very much adopters of technology, now they have made so much revenue, so much money from their holdings that they have actually become very conservative. And discovery of technology is now happening in the newer chains. Yeah. And so it comes down then now to the move ecosystem, and it is a fantastic story. I mean, I don't know how much you know about the story of how this came to be, correct? But for anybody that doesn't know, I mean, all of the move technology comes from basically an investment from Facebook for years and investing hundreds of millions of dollars into building this technology. So it's not like just some random like technology that was created from one day to the other. There is a lot of R&D and years of research on the back end. Then it comes to market, and on top of that, you have a little bit of like a Coca-Cola Pepsi phenomenon, where not only one company built on this technology, but two large companies that both of them raise a substantial amount of money. So you have Sui and then you have Aptos, and in a sense, they kind of like make each other better. They try to compete with themselves. Yeah, instead of trying to compete with Ethereum, they try to compete with themselves, which basically pushes them to innovate and make better technology. We use move based smart contracts on a daily basis, and even though I'm a personally very big fan of Solana, I can tell you that from a usability perspective, these smart contracts are more stable, and they have less possibility for unfairness. So the contracts in the move environments have less problems with MEV and with, let's say, inefficiencies in the market, which is I think something in the long term a lot of users are going to appreciate, the fact that they don't feel that they're being tricked by some random bot on chain like you do in EVM. And I think a lot of the narrative comes from that, correct? It's kind of like better Solana, more fair, and why not? I don't know how long the narrative is going to last, but my 2 cents on this is that compared to Ethereum and Solana, there is a very interesting opportunity in Move, and is that right now US dollars are very valued in the market. And inside of these ecosystems, they're still early on that there are a lot of on-chain incentives for users that are just looking for a place to put their dollars to work. Yeah. In Ethereum and in Solana, you don't get any compensation for you to park your liquidity there because they're very mature ecosystems. But in something like Sui, or Aptos for that matter, you do. So what's very interesting is that you can build long positions into these assets with kind of like a downside protection, because your allocation is actually in US dollar. And so in a sense, it's kind of like an option. You have an option of success if these networks become very big, but your downside is very limited, and that's actually a very interesting position to be in right now.
And like based on what you said, right? Those are like the key benefits of the Move programming language. Do you think that these technological innovations, both in Sui and Solana, like do they translate to long-term investment potential?
I think that technology is definitely far from being the main reason that an ecosystem becomes a success. Like an ecosystem is by definition, people and founders trying to build great things. And that's why I was trying to make a little bit of the reference to this kind of like Coca-Cola, Pepsi, which is these companies have great technology. Yes, they do, but they're also like very aggressive trying to figure out how to acquire customers, and their customer facing approach is very aggressive compared to other tech companies that are only building tech. If you look at Sui, for example, they're really going after like the user and connection with the user directly, which is what can generate adoption. Yeah. So when it comes down to the value of the technology, it's an enabler. But ultimately, there are a lot of blockchains out there that have great technology. As a matter of fact, every blockchain has better technology than Ethereum. All of them do. But the ecosystem is what matters, correct? So the real question is, will they be able to build an ecosystem? And so far, in my point of view, is that in the whole digital asset space, the only use case that we have of an ecosystem being successful outside of EVM is Solana. That's the only real use case. The rest is to be seen.
All right. And maybe Michael, how does Ethereum maintain its position as a leading altcoin despite new competitors? Yeah.
Yeah, I think it's just momentum, right? And also there is a lot of value locked, and it's like that, right? You were the first on the block with smart contracts. You have attracted, a lot of dexes, a lot of protocols, a lot of games and NFTs and everything. So there's a lot of value still on that chain in people's wallets, right? And in the ecosystem. And so yeah, it's and that value. And honestly, like, I have a business, right? And sometimes people want to pay me in crypto. That's fine. And I always tell them, send it to me on the Ethereum blockchain, because that's the biggest one. I don't want to have my funds on not even on Solana, to be honest, right? So you see, like, so the trust factor is quite strong. So I would use Ethereum blockchain, for example, personally, for getting paid and my funds on chain as well as on the bank. That's a different topic because we still support credit cards. But you see what I mean? Like, so the trust is huge. It's very decentralized, or very large at least. And so that's why I think it's still there. But I think that, if you want to make money, right, and you want to invest to grow your portfolio, while keeping the risk low but having a high risk reward, basically, then you need to look at other altcoins, and you need to understand which one have higher potential of growth. Because Ethereum, I think, every project has its time to shine, and has a max size that it can reach realistically, right? And I think Ethereum is very close to its all-time peak, and it's just momentum, and people will move from one to the next step.
And in light of the current bull market, which altcoin shows the most promise for scalability, and why do you think so? Also, just wanted to put it out there that none of this is meant to be financial advice. Everything that we're discussing today are purely for educational purposes. Yeah. Maybe David, would you like to share?
Yeah. So I mean, I think that I would hope Michael is in agreement with this, but as a quant firm in general, my personal view on this would be that, like, the one feature that you can guarantee in this industry in the coming years is volatility, not direction. You're gonna have a lot of volatility, and you need to act accordingly. Meaning, I think building a portfolio of altcoins and just going long on them might not be the smartest thing to do, to be completely honest. Like, you need to be tactical about this, because the level of volatility in this industry is incomparable to anything. It's ridiculous. Yeah. And when, even though things can have adoption and can have value, they can also have drawdowns of 60-70% on a yearly basis. Like, I mean, we saw basically SUI collapsing 80% and then going up again 80% in a matter of 3 months. Like, so for me, that is really the key insight, which is the volatility is a feature, not a bug. And if you understand that, and you know how to make that your friend, and how to build portfolios that dynamically rebalance, approach it as a macro trade with good risk management, most probably you'll find success. How do you do that? You look at assets that have momentum, that have a growing ecosystem, and hopefully that are decorrelated. Yeah. And this is not so hard to achieve, as a matter of fact. And then from that, you can build different strategies. So, as a matter of fact, like, right now in the industry, I mean, I think even you guys at Bybit, like, people are giving like, platforms are giving users so many tools to automate trading nowadays, where the human inputs its vision of the market, but that vision doesn't need to be just led by long. Huh? It could be, maybe, I believe that the non-EVM ecosystem will take a larger part of the market share over the EVM ecosystem, which is something that I think, no financial advice, but very probable. Correct. Now, without knowing exactly which one would be, you could look at it simply like that. You say, okay, I know that volatility is going to be very high. Great. And I know that most probably market share of EVM will decrease over market share of non-EVM. Yeah. Not saying that EVM would not be dominant, but right now the market share is too big compared to the amount of investment and innovation that is going on elsewhere. So with those two insights, you can definitely build a very nice portfolio to take advantage of that situation, I would say.
And you mentioned a lot about volatility, right? So maybe, Michael, how else should investors approach portfolio diversification with these altcoins, in addition to what Dave has already mentioned?
Yeah, so I have a method for that, right? So I'm talking about it also on YouTube. I think so. The thing that I want to share now is something that normal retail can do, right? Because there are some aspects that David mentioned which everyone can do, but some of those are quite complex to implement as a normal person, right? Because you have a job, you have family, you're busy, whatever, right? So I want to just share very quickly my screen again, if you can put it on there, just to show what you could be doing, right? So I want to go to Bitcoin and just have this simple strategy here on the screen. It's very simple one, right? And just to illustrate what my method is, because the method that I use is quite simple, but because of the volatility and the trending nature of the crypto market, it's not that hard, guys. Okay, so here it is, right? So this is the beginning of the 2023, right, where the next bull market, right, or leg up started. And here you don't know yet which altcoins will be interesting, right? Because this is just the start. You didn't even know that this will come back up, right? This was FTX. Everyone was pretty bearish and everything. But the moment that Bitcoin starts to be weak, right? This is where the red zone, where you had some altcoins rally in this phase, right? And maybe you missed them, right? That's fine, but because just this phase one. So the ones that have been rallying and showed signs of life during this first phase, now in this red zone, because you have time, right? Because here it starts to consolidate a little bit. And instead of putting everything into Bitcoin, here you can say, okay, which altcoins have been rallying here? Let's put them into my portfolio to benefit from the next leg up. So yes, Bitcoin went up 130% or 150%, but you have FetchAI, Sui, and so on went up even more, right? So that's a simple way to do it without having to do complex research. Sure, listen, you should know what you're doing, right? But don't put it into coins that have been interesting last cycle, right? Because they might lose momentum. They might not have the narrative, right? Like Ethereum, like ADA, like God knows which other coins. So that's a very simple method. And then use, in my opinion, a trend following approach, because crypto is trending, which is very nice, right? Not a lot of assets are trending otherwise. And then just simply follow the trend until the end and make sure to get out at some point so that you don't give all the profits back, right? So I think this is a very simple method to apply. And yeah, check my videos. I explain this stuff.
Right. Thanks,
If I
Michael.
may maybe give some additional insight here. I mean, I actually really like the approach that you're sharing. By the way, I think for normal people that, like you said, don't have the time to be monitoring this on a daily basis, even weekly basis. Another characteristic of this market that is super interesting is that it has like a rather attractive fixed income structure, meaning that if you don't want to bet on anything, you can also just get very good yield. Right? You can actually yield your assets at a relatively like a good performance. Not saying that that's what you should do to have like a outperformance of your portfolio, but what is very interesting of that is that if you yield your assets in fixed income and take all of the fixed income yield that gets generated and automatically put it in very high risk assets, the structure of the portfolio is actually super interesting as well. And this is a little bit what I was talking about also with incentive programs, which is another level of it. But imagine that there are no incentive programs. Nonetheless, the fixed income leg basically acts as an option. As long as you are, let's say, on a weekly basis going, okay, what are the coins that are performing well, correct? And then going to those coins. And then as soon as those coins get to a certain level of profit, you can repeat the cycle, go back to dollars, increase your position of fixed income, and keep on accumulating fixed income. The reason that is interesting is because as soon as you have retracements in the market that are very strong, you are reaching cash. So you can actually then increase your positions if you would want to, instead of missing those opportunities. But while the market is going up, you might actually not earn as much as everybody else, but you still do have a portion of your portfolio that has a very, very long position. And because it's a small portion, you might actually have higher willingness to take risks. A lot of people in this industry, they just go and say, okay, I'm going to park everything in Bitcoin because it's, let's say, medium risk to low risk. Yeah. But as a matter of fact, in portfolio theory, it's more efficient to have, let's say, 70% of your portfolio in very low risk and 30% in very high risk than 100% in medium risk. That is more efficient. And in this industry, you can replicate that relatively easy. You stake your stable coins, yield them on a weekly basis, take the yield, and buy the coins that are outperforming. Uh, if you want to make that a step ahead, you might take those coins, put them on chain, get yield, and collect rewards on top of that if you want to, and then funnel those rewards into long positions.
Great insights, David. Yeah, before we move on to the next segment, let's just take a look at the chat box. A lot of people are saying that they love hearing these takes from you guys. Let's just take 2 questions. The first one is, what's your biggest lesson from trading altcoins? Maybe David, would you like to share first?
Yeah. This is something that I actually learned from one of our traders. Is the concept of beta trading.
Mhm.
It's actually very similar to what Michael's saying, but is the basic idea that when you have a market move, you can actually see which ones are the assets that have the highest impact on that move. Let's say Bitcoin moves 3%, and you have a bunch of assets that move 15%. Okay. In either way, correct? Bitcoin goes down 3%, they go down 15%, or Bitcoin goes up 3%, they go up 15%. And that actually tells you information. If you have an asset that Bitcoin moves 3% and the asset kind of like moves 50 basis points, you might think, okay, this means that the asset is very stable. But it might also just mean that nobody cares. Yeah. And this concept of understanding the beta of assets enables you to detach yourself from the narrative, which is very important. Like a lot of people, they fall in love with these assets, and majority of mistakes that they make is that they fall with a lot of them, and they miss when the narrative change. While when you use the charts to understand the beta movements, you look at it the other way around. You look at how does the behavior tells you what people believe the narrative is, and then according to that, whenever you have market retracements, you would assume that if the market comes back, higher beta assets would come back faster and harder. Yeah.
Yeah, that's a great tip, David. What about you, Michael?
Yes, altcoins. I made a lot of mistakes there. So the long and short of it is that, like I said, pick the altcoins that have a narrative right now in this cycle. And cycles are a great thing, guys. Like, take them seriously. They are your friend, cycles, right? If you just look a little bit, what is sexy in this cycle, and you ride that trend, is great. But you have seen with Luna, and I take Luna as an example because everyone knows, right? So it's easy to follow along. So I have decided that I have every coin in my portfolio fully automated, because I share how to do that. It's not so hard, right? So so what I learned is, yes, altcoins, right? Great. And then portfolio management, position sizing, right? Not putting too much into smaller coins. I have a method actually to calculate how much to put depending on the strategy's performance and whatever. But the important part here is that the reason why I have the automation rule for my own portfolio is because I don't want to ride the coin back down, and it can go very fast. And I want to sell automatically when certain criteria is met, right? So what I learned is, yes, altcoins, let's go. Yes, position sizing for risk management, but also automatically getting out into stablecoin, for in my case, so that I don't give all the profits back. So this full automation of portfolio is for me very important, especially when trading such volatile assets.
And what are some emerging trends in the altcoin market that new investors should be aware of?
Maybe I can go for that.
Sure.
If you look at the altcoin markets, one of the things we've been looking at this for months is the fact that there is a very high premium on infrastructure, and that premium seems to be unjustified considering how much infrastructure is there and how little has been built on top. In the flip side, the actual protocols that make money, which are, let's say, the closest that we have to real product market fit, real companies, have very low multiples on their TVL and the revenue. Correct? If you look at the DeFi protocols, correct, the Aves of the world, the Chainlinks, the whatevers, yeah, they started to get stronger momentum recently, actually. And this might be the beginning of a trend or not, but what is interesting is the fact that for a very long time infrastructure was the king, and I think right now there's a lot of narrative around the fact that maybe we reach that saturation point. As a matter of fact, I even hear this from friends of mine in the private market. Like, we're very close with a lot of VCs. We ourselves invest, even though we're not a VC, but we're very close with a lot of VCs. And when we talk with them, and asked them, what is your investment thesis for 2024, 2025? I used to hear everybody just saying infrastructure, correct? That was the thing. Everybody was just investing in that. And now actually everybody's like, maybe now that we invested billions and trillions of dollars in infrastructure, we should invest in things that are using that infrastructure to make money, correct? And so, there are a lot of protocols out there that have cash flow and they have product market fit, and people just don't realize it. And sometimes their treasuries are bigger than the value of their assets. So that's something to look at. It's an interesting trend. I think the DeFi as it was in DeFi summer is not there, correct? It's not like a ton of like crazy products coming every day, but the large DeFi protocols are very stable actually, and they have very predictable revenue.
Thanks, David. Before we continue to the next segment, just wanted to remind everyone to do the pop quiz if you would like to win some rewards. We will also be giving away red packets very, very soon during the live stream. Just click the red packet when it appears and you'll be able to claim your reward. Do note that this is exclusively for new users. So if you haven't already done so, sign up for a Bybit account now and click that red packet when it appears. Right, next, let's break down some advanced trading strategies for Ethereum, Solana, and Sui. So we'll uncover the key technical indicators and market movements that could help traders maximize their gains. David, what are some of your favorite or most effective trading strategies for altcoins during such
So I mean, I think I'll try to focus on things that people can actually do. One strategy that I appreciate a lot is the use of virtual AMMs. This is like basic GMX type systems, or Jupiter in Solana, if you could look at it. I think they provide an actual fantastic risk reward ratio. They're basically a pool composition in an automated way that collects fees from users. They are actually pretty interesting products. Now, what is even more interesting is that you can, if you have a preference for Ethereum or Solana, you can transform those assets into a coin alpha model, correct? So you can actually decompose what's on the pool and go long the dollars that the pool is not long, in a sense. So you can say, okay, I'm gonna have my JLP asset, but I want to only have Solana long. So basically, virtually, you're just long Solana and then collecting fees, which is interesting. Correct. You can do the same in Ethereum. You can put this into a bunch of different virtual AMMs that exist, which will yield your Ethereum. So you have alpha on that, and then you can go long. Yeah. But if you don't want to go fully long, then you can just get exposure to these basket assets, which are very interesting. I mean, if you look at the performance of these basket assets, they are actually for the normal person that doesn't want to be automating stuff, they behave as good as it can be for this industry in terms of volatility and risk reward. So that's definitely one that I think I recommend people to look into and take advantage of that position. In terms of automated strategies overall, I think everything that is momentum and everything that is portfolio management, my real advice is that I think people should just rely on third-party experts to do so, either vaults on chain or asset management systems. They can try themselves, but to be honest, unless you have a real passion for spending your weekends coding, I think it makes no sense.
Thanks, David. What about you, Michael? Maybe you could share some strategies.
Interesting takes from David. I think, and David, you can tell later, right, if that's correct or not. I think the method you suggested is for large amounts of money, but don't tell me now, tell me later, simply because the yield is not so much as you can make with Sui direct investment or Solana or something like that. So I want to go in the other direction, like what normal everyday people can do if they have like $1,000 or more. I think below $1,000, it's not quite interesting to to take too much risk. Just go Bitcoin. But if you have $1,000 or more, you can start spreading a little bit across different assets. And what I recommend people, without saying that I'm not at all a financial advisor, is actually something that I have also built my channel around. So here is the thing, right? I believe in trend following strategies. Yes, it's boring. Yes, it takes time to play out, but it has been working very well since a long time on crypto because it's a trending asset. So I have 2 videos on my YouTube channel, which will actually help you guys to get started with some method of, allocating today. It's fully free, right? So you go there, you check these last 2 videos. It's about a strategy It's called Gaussian channel strategy. I've developed it myself. Well, the idea is not my own, but the strategy, when to buy and when to sell, is my own. And you can get access to this. It's free, whatever. And you can just simply automate it, right? Now, the good thing about this is that you are in full control of your portfolio, guys. Okay, instead of giving it to some third party to manage it, pay them fees, don't know what they're doing, right? You see exactly all the numbers in your trading view. You can connect it to Bybit. By the way, Bybit, I really love you guys. You have such a great sub-account system. And so if you do automation, by the way, then you should separate them into different sub-accounts, which Bybit makes it very easy, right? That's why I love you guys, and other things. So why I really recommend people is get a strategy that is boring as hell, like a trend following strategy. It's not risky usually. It gets you in, gets you out, right? You would have fully avoided Luna and stuff like this because it would have sold way ahead of time. I tested this, right? And so it's the easiest thing, right, that most people can do instead of, going into complicated methodologies of like, yes, if you are a professional, you're doing this for a living, fine, right? You have to do all the hedging possible, right? But if you're a retail investor, you shouldn't invest more than you can lose, right? You shouldn't trade manually anyway, because you don't know what you're doing. You get faked in, faked out. There are a lot of emotions. Emotions are the biggest issue, right, that most people have. So isn't it better, right, to get a strategy and to just automate it, right? So this is like, I'm trying to help like millions of people with this. And I think this is the easiest way to do it, right? If you have more money, right, you have like 500K, a million, yes, then go and give it to some smart people to manage it for you. But if you have less, then you can take care of it yourself, and even better, in my opinion, yeah, in that case.
I do like the idea of using someone else's technology and intelligence, correct? So I'm definitely not against that concept. I think vaults are a great solution for that. I think if the algorithms that you build are definitely open source and free, they are a great recommendation. I think my point was like to not I think especially for a small size capital, the added value of trying to build your own momentum strategy is a little bit of a net negative in my point of view. So that's really what more my point was. Not too much the fact that it has to be managed by a professional manager, but just that the strategy itself, the economic gains from trying to optimize it yourself are very small.
Thanks, guys. Bringing it back to just Ethereum, Solana, and Sui. So, like, Sui has shown remarkable growth, hitting new all-time highs with a significant transaction boom. Considering its recent pullback as a potential healthy market correction after such aggressive gains, can this be seen as like a strategic buying opportunity?
I mean, the pullback already went up again, It lasted short.
Yeah,
That was
true.
not the opportunity was pretty short. So I think it's hard to tell now, correct? Because now it's not anymore in a strong downtrend. To be honest, like I think if any, I have not checked exactly where it is, but if I'm not mistaken, it's like basically at the same highs that it was before the assets went down 3 to 6 months ago, correct?
You can show my screen, and then David can, if you want.
Yeah.
Because what you're saying is true. I mean, yeah, it's true.
Yeah, exactly. I mean, like we basically
See, so like the uptrend
high.
started already, and we're back above the previous, or at the same high as previous. So if you missed it, right? That's why I'm saying if you automate this to buy when it's green and sell when it's red. I know it sounds stupid easy, right? But it is easy, okay, guys? Like this is how it works. Like if you wait for this, like I'm not kidding. Like I do this for 6 years. It's like so you need some automation. Otherwise, you would miss it, right? You would doubt. You would have fear. You would put too little money because you're afraid, and then it's too late. You come back at the top, right? So you have to avoid to come at the top, guys. And the way to do it is to have some strategy that tells you how to do it, right? So the momentum is to the upside. You can see that, right? I think Sui is quite powerful. Where it's going, no idea. Don't ask me for price targets because it's impossible in this case. But definitely there is no need to be bearish right now, in my opinion.
And Solana, on the other hand, also has been forming like an ascending triangle over the past few months, signaling a potential bullish breakout. With the market anticipating this move, how significant do you believe this breakout could be for Solana's market position?
You want to take that one, Michael?
Let's see, guys. Let's do some Fibonacci here, because why not, guys? So if you like, yeah, I mean, what do you want to do, right? Let's do it. Let's be fair. Let's put it here. And yes, I have a couple of things already drawn on my chart because I did a video about this. So Fibonacci's on Solana is a bit tricky because it went so parabolic here that it's all off the charts. Yeah, it's literally off. Let me delete this to not confuse you guys. So usually what you can expect, right? If you draw the Fibonacci from the top to the previous bottom, and if we want to be very bullish, let's put it exactly at the wick here. Then you can expect that it will at least because Solana is so parabolic, go to this upper, 3.618 level between 3.618 and 4236. But this is like something that can happen, doesn't have to happen all the time. And so the strategy could be basically that if it breaks above where it is now, you see that it's in this area here, right? It's locked in this area. If it breaks above this, that you could open a position and then ride it and then start selling here, right? So to get out again, to not get wrecked, or you simply automate it and don't care about it anymore. That's another thing. But this is a price target of about $900, which is a lot. Like, that's crazy. I'm super aware of that. If you use the parabola actually to determine the price target, it's even worse. It's like $3,700, which that's crazy, guys. It's not gonna happen. Okay. Right, so $1,000 is like the best case scenario in my opinion based on this. But again, guys, I don't know, and that's why trend following is cool, because when the trend truly is over, no matter what the Fibonacci say, right, the trend is over, you get out, right? That's the magic here. And so any prediction like this is nice, but I wouldn't trade based on that. Instead, what I do when I do these price predictions, that's maybe also important for people to realize, is when you build a portfolio and you decide how much money to put in, right? One of the variables to do that is what is the upside potential, right? Yes, you have the risk metrics, drawdown, all this stuff, but then also what is the upside potential? So if the upside potential is very high, right? So here it is high, right? Then I don't need to put that much money to make money, right? I can lower the risk by putting less because the potential is so high, right? So that's what I use it for, not for selling at this level, because I don't know if it's gonna go there, right? But that's the potential it has.
And what are common pitfalls traders should avoid when trading these specific altcoins?
Yeah, I mean, I think as Michael was saying, it's about risk management. Like even though you can think it's gonna go there, if it retraces, you need to be okay with taking small losses as well. Like, it's completely fine. The game is basically surviving. Just don't blow up the account. Just survive. If you survive, you'll be fine. That's really what it is. When it comes down to Solana, maybe 2 cents on something on top of the chart, correct? So you have the chart, and the chart is telling us price action now. Solana is an asset that honestly it has a lot of people that are trying to also accumulate more Solana. So it has a lot of buy pressure, and this is fantastic. You can see that in the chart. Yeah. So why is it not going up? Correct. And I think that one of the things that people that are trying to go long Solana and that believe in the asset, they need to be conscious of, is that the asset is still being affected by FTX. It's still being affected by it, not in the narrative way, but in the fact that all of the Solana that was on FTX was sold to a bunch of insiders at $60 or 60 something dollars, correct? And every month they have unlocks, and at the end of the day, they are just trying to break even. Yeah. So there is also going to be a moment where all of these private equity and VCs that bought into all of these Solana are going to stop selling. So what's very interesting is that if the demand for the asset maintains, there is almost certainty that the selling pressure will decrease. It's interesting, correct? Not saying that that's going to make it go up, because also the demand could decrease, correct? But at today's levels of demand, it's actually rather good performance, considering how much VCs could buy cheap and are unlocking now at very good prices, correct? If I'm a VC, I bought Solana at 60 and I put $100 million. Some of them did put $100 million. They're unlocking now to make a 2x. They make 100 million cash. Why to take the risk? Just sell, lock in 100 million. A lot of them, what they're doing is that they're trying to just sell as much to break even, and maybe after that they'll go long. And which is also interesting, because then the sell pressure might actually end faster than what we think. But it's important that like you do actually realize that it's an asset that has like an abnormal sell pressure due to that event, correct? A lot of other assets also have sell pressure due to their VCs selling their bags, correct, and like people selling their asset. But what is interesting of Solana is that a lot of the early VCs kind of like sold on the first cycle. So compared to other assets that are up and coming, that are sexy and nice, they still have a lot of like sell pressure from unlocks of venture, while Solana is in this nice position where a lot of the venture unlock happened in the first cycle. It has a good narrative, and the understanding of the sell pressure now is also relatively understandable. So just my 2 cents on that.
Can I add something to Solana there?
Yeah, sure.
So I think all of that is true, right? I just think that Solana is such an obvious trade. It's also called a crowded trade, in my opinion. So, I mean, sure, I'm allocated to Solana, right? But I think that it's super obvious trade. So everyone would like to be in Solana, right? So then that's why Solana might not pump as much or take longer to pump compared to Sui and others, right? Aptos, all this stuff, which are coming out of like a surprise. We just pumped and you're late, right? So this is always happening because otherwise everyone would make money, and that's not how the market works. The market works that if you have some alpha and you're prepared, then you can make money. And if you just chase, it's called chasing, right? If you're chasing, then you're gonna make little money on the top side, or you're gonna hold on to it too long and actually lose again, right? So that's why, yeah, Solana is interesting, but I wouldn't bet too much on it because it is so obvious and already made so much money. It's crazy. Yeah? So take care maybe when you allocate or create your portfolio.
When you look at the valuations of these companies, you could say the same from all of them, correct? The FDV of all these assets is a little bit of the charts at the moment still, you know. So it's a, for me, it's really like a supply demand characteristic, where if we would just look at the how much money other people have made and the valuation of these assets, I would be afraid of touching anything.
I agree. The question is, who would buy Solana now? Because everyone bought it already, right? Because they don't want to miss. So it's everyone who wanted to buy had already bought it. So who is coming to pump the price, right? So yeah.
I mean, if you look at the buy pressure, it's actually it's pretty consistent, correct? So there are a lot of people buying. Is maybe still existing holders that want to continue to accumulate their position because they believe it's going to go to 3,000. I don't know, you know. And they're just basically like piling into it as much as they can, similar to the phenomenon that Ethereum had at the beginning, or Bitcoin still has, where I think majority of the buy pressure of Bitcoin is from existing believers, which is fine. You know, I think there, you know, you can have like a growth of your ecosystem, try to convince people that you have a lot of value to give to them, or you can have people that, yes, they made a lot of money in Solana and that's why they like it and they think, oh, this is great, it's safe, you know. And they go, but I agree with you. I mean, like the larger assets are not gonna 10x, you know. And I think it depends a little bit on the size of capital that you would have and what you like to do. I really think for Solana in particular, I would definitely do something like volatility based trading, or the strategy that I was saying, by allocating to the VAMM pools on Jupiter or something like that. Like that would, I think that would be the smart move, because you might actually not get as much upside otherwise.
Maybe invest in Jupiter as well. Not financial advice, but Jupiter. That would be a trade that not many people expect. Okay, back to
valuation. Valuation is still pretty high, huh? It's like 6.
You know,
yeah,
like
you can do drift. That one is cheap.
You know, many market experts are actually drawing parallels between Sui and Solana, suggesting that Sui could potentially replicate Solana's rapid ascent in the blockchain space. Why do you think experts are viewing Sui as the next Solana? Like, what specific characteristics or developments in Sui's technology or market strategy contribute to these expectations? Like, you know, you guys mentioned that there are a lot of people who have already most likely bought Solana. And do you think that they're like moving over to Sui?
No, it's not that they're moving over. I mean, there are honestly like a lot of different factors, but I give you 3 that for me are very interesting. The first one is that blockchain abstraction is becoming a thing. I actually think this is something very bad for the price action of all blockchains, but it's just truth. Like, you're not so locked into an ecosystem anymore. Like if you use the native bridge of USDC, you can go from Arbitrum to Base to Solana without cost in one click. Correct? And you're done. It's fantastic. Like you can just see better yield elsewhere and move. What does that mean? That like you can actually go to another ecosystem and come back. Maybe you just like an applications elsewhere, and then you use it, and you come back for another application. That's absolutely okay. So you have blockchain abstraction as a trend, and I personally like it as a user, and I think users like it. Therefore, they're more willing to experiment because they don't need to use wrapped versions. And I think the stable coin companies are really doing an amazing work at enabling users to experiment and test different blockchains because they're expanding. Yeah. Um, Not all blockchains, but as soon as blockchains start to get some adoption, they do. Correct. Now, the second one is that if you look at Solana in the early days compared to a lot of other blockchains, they did a couple of things differently. They built technology and that was advertised to be friendly for the developers of the application. So the philosophy behind it was that if something is better for the application developer, therefore the smartest people in the world would choose them and build better applications. Correct. And if you look at the move technology, that's kind of like what it is going for as well. So it's in that same trend of developer first, developer friendly. And then the third thing, which is what I think is super interesting, is what we internally call this the Apple Store phenomenon, which is that the main reason for majority of these applications to not get adoption today is still the same reason that back in the day when you had an Android phone, people were afraid of putting their credit card details into any app, correct? Because they didn't trust them. They thought, okay, somebody's gonna hack me, and this shit is it's complicated. And for us that we're native in this industry and we use this technology every day, might not be the case. But for majority of people, they open a decentralized application, and the first thing they think is, I'm gonna lose all my money. Okay. The only way that was fixing Web 2 was with the application stores. Correct? Application stores started to become more mature, and you had the Apple Store basically betting the quality of applications. So you have applications being higher quality, and at the point where it would be unthinkable that an application that would be vetted would be there to steal your money. Like that wouldn't be the case, correct? And that's really kind of like the step that we need to take, and that's the step that Move Technology is kind of like bringing to the market, and that Solana started to bring. Correct? The idea that if an application is publishing this technology, security first, meaning build trust. Being completely honest with you, I myself prefer to use Solana applications than Ethereum. Even though I like Ethereum for holding and storing value, I don't like Ethereum for using applications. Why? Because they get hacked all the time. They're actually terrible. In Solana, they're very little incidents compared to Ethereum. So typically, I'm more willing to experiment. And now with Move in Sui and Aptos, even more. The incidents are almost non-existent so far, which is great. And the more we get to that, we get to a point where a DApp is an app, and people are not thinking, I'm going to put my $1,000 here and they're going to disappear tomorrow. You're going to get adoption, correct? And basically it's the same strategy that Solana used. So you have these three things, correct? You have like blockchain abstraction, which is fantastic, developer first technology for builders to build. And then you have like this whole approach to security wrapped around great marketing so that people can trust the technology. And we're not there. Like people don't trust Ethereum smart contracts. They just don't.
Thanks, David. We've covered a lot today. Unfortunately, we're running out of time. So we'll just quickly look at the chat box and see what the audience has to say. All right. Someone actually asked, how can newcomers differentiate between hype and genuine potential in altcoins? What are some tips that you guys have?
Maybe I'll go super short and then I'll let you go. Become a user. That's it. Test the stuff, put a little bit of money, play around, have fun. I went into Solana very early, not because I was looking at it as an investment. I started using it and I was like, this stuff is cool. It works really well. Must grow. Really become a power user. That's really my advice.
Yeah, that's actually a very smart thing. Like you say that also in stocks, right? When people say, hey, you have a Tesla, you have an Apple phone, you have a thing, then buy those stocks, right? Because why would you buy those products? Will be bought also by other people that also like them. So that is actually a very good advice. I think, I honestly, I think it's very hard to do. That's why you need to do risk management. So yeah, so if you want to, like, you do that, what David said, plus you make sure to don't put too much funds, right, into completely new things, because you don't know, right, where they will be going. And keep in mind that if you put $100 in Bitcoin, you still had massive amount of money today, right? So you don't need to go all in, right, with all of your funds into this stuff. But at the same time, you can also use like tools like Morales Money. I don't know if you know this, but it's quite cool because it shows you can then see how many like profitable wallets have been buying this the coin of the project. Whale wallets, how many are there, right? So you can use this stuff, some kind of some analytics tools to see who else is buying it, right? Because then you might be you might know, okay, if there's no whale wallet, no profitable wallet buying this in extreme cases, right? Nobody, then you can stay away from it, right? And you might enter only when they enter as well, just to reduce your risk. So yeah.
And what are some signs that an altcoin might be a good long-term investment, not just like short-term?
It's very similar to the previous one, right? Because if if it's, I think, you have the value locked, the amount of wallets using it, although it can be manipulated, right? But amount of dApps, I think it's a very, very important number that is hard to fake, right? Because you actually need to build something, right, for this number to go up. So you see that the amount of applications and projects on that chain is growing constantly, right? That is nice. And it has to be easy to use, right? So because usability is key. I mean, if you want mass adoption of whichever project, right, then you want it to be easy to use. So the wallet has to exist, right? It has to be easy to use. The some kind of bridge has to exist, right? So they can come from wherever they are now, right? Ethereum, Solana, and go to that thing, especially if it's a layer 1 or layer 2 where you need to bridge your funds over there. Well, you can do it with Bybit as well, but you get the idea. So it has to be easy to use. It has to be inviting. So like there has to be a use case that is like a killer use case. So for Solana, it was clearly the meme coins that attracted a lot of people. And by the way, I was invited to a Solana event very early on, and they shared this new feature where they have the smart contracts abstraction, where when you create a coin, you can say which characteristics it should have, so that you never code yourself. You just pick the features and you say launch my coin. And because of that, they had so many altcoin launches. So for me, it was clear that once they launch this feature, they will go bananas, right? Because it makes much easier to launch and to have a safe implementation, which, because it comes from the Solana Foundation themselves, so that implementation was easy, right? So you have all the liquidity features, who can put money into the pool, who can do whatever, and so you can just simply click the checkboxes, right? So any other chain, by the way, watching this video, you want to replicate the success, create this kind of abstraction for coin creation, and then you can do that. But look for use cases, right? Look for use cases, and then it has to be easy to join, right, as a user, and that would be a good I think longer term investment. But then there's so much to say. Also, David mentioned it. Don't get in love with any coin, right? And like, because it's an investment, right? It doesn't love you, you don't love it, right? So if the trend is over, you get out, right? Not financial advice, but don't fall in love with any investment whatsoever, and make sure to have some exit plan, right, where you would get out before you lose your profits. Yeah.
Yeah.
Thank you. And one last question, maybe for David. Why do some altcoins exhibit significantly greater volatility than others?
This is a good question, actually. This is actually something that is a little bit more technical, but I'll give you two points reference here, actually. But the first thing that I want to say before I go into how it's solved, and still connected to the last question, is the idea of relative value. It's much easier to understand what something is doing when you compare it against other things that have a similar characteristic, like benchmarking, in a sense. Like I think Michael did at the beginning of today by trying to showcase Ethereum to Bitcoin, not to dollar. Correct? It's much easier to understand when you understand the value against other things. Yeah. And when you're looking at different altcoins, correct? And the question, like, okay, how do you understand the volatility of the altcoins? How do you know if they're good? How do you detect the trend? It's much easier mentally for you to answer the question, that is this going to create more value than this other thing in the next 6 months, then is the trend going to continue up? Because the thing is that you always fall into traps of thinking why it would go well. Like, if I ask you, will Ethereum continue to deliver value in the next years? You most probably going to say yes. You're going to think about it. You're like, yeah, of course, stuff is going to continue to grow, correct? But so a much easier question to answer would be like, would Ethereum outperform Solana? That's actually a question that is more interesting, because it would give you an understanding for you to have an opinion in it. And according to that, you might say, actually, let's get out. Maybe not, so when you start charting assets again, all other assets, you start seeing their volatility and their trends in a lot more clear, correct? So you can see really what's happening to those assets. When then you enter into the actual volatility of the asset itself, volatility is going to be a relationship of like liquidity and interest, correct? So if the interest for an asset is higher than its liquidity, typically it's going to be very volatile. Yeah, because the people that are building liquidity have to take a lot of risk to compensate for the fact that everybody's going long, correct? I mean, if you think about it in the most simplistic way, is if everybody's going long SUI, in the case last 3 months, correct?
Mhm.
Somebody had to sell the SUI, correct? Somebody had to. But if nobody wants to, there is not a lot of liquidity compared to the buy pressure, correct? So it starts gapping. Yeah. So all the liquidity starts becoming very small, and that generates a lot of volatility. You have an asset that is maybe very safe, where there is a lot of agreement on the price. Let's say price discovery is there, and it has the opposite characteristics. It would have very thick liquidity and not a lot of momentum on the asset. You would have reduced volatility. That doesn't mean the asset is good or bad. It just would have reduced volatility, correct? I think a very interesting example of this in our industry is actually XRP, correct? If you look at XRP, it's a very stable asset. It's actually great. They're delivering on a lot of products. They're building a lot of stuff, and the asset has a lot of liquidity, correct? But it has a lot of liquidity, but the amount of demand is lower than the liquidity. Therefore, volatility is going to be low. Yeah, it's just stable.
Yeah, thanks, David. All right, and yeah, that concludes our insightful discussion on whether to include altcoins in your portfolio during this bullish market phase. I'd like to thank our experts, Michael and David, for their deep insights, and all of you for participating. We still have some red packets left for new users to claim, so just click that red packet and you can claim your reward. If you would like to, you can also refer your friend, get them to sign up and claim their reward. Right, today we've navigated through the complexities of trading strategies and looked into what the future might hold for significant players like Ethereum, Solana, and SUI. Of course, please note that none of this is meant to be financial advice, and the topics discussed are purely for educational purposes. Thank you once again to our panelists and to you, our audience, for tuning in to today's live stream. For more information, please visit our Bybit Learn website, and don't forget to connect with all of us on social media. We also have some exciting new projects that are coming up on Bybit, so just keep a lookout. Let us know, and yeah, stay tuned to our social media platforms for updates. Thanks again, and see you next time. Bye-bye.